major benefits are paid. Typically, copays are paid without the deductible, or the deductible's waived for those, but they would still have an example of that.
So when we say a copay, that's like when I go to the doctor and I have to front them like $25, $30, $40 or whatever for the visit. So that's the part that I pay, and then the insurance starts applying my deductible or whatever, or making a payment.
Yeah, when you have a copay,
Mm-hmm.
that's defined as first dollar coverage, because the visit to the physician is going to be roughly $75. That's the discounted price of a normal visit.
Okay.
You're going to pay $25 of that, and the plan, whether it's a PPO or an HMO, is going to pay the other $50. Mm-hmm. Okay, so they're involved right the first time you go on that, and so again, that's what is going to drive the part there. The other piece that would make a difference is what type of drug coverage you actually have. So,
right.
Some of the newer policies today are generic only coverage. So there would be no coverage for brand name drugs at all, and this would be defined as drugs that do not have a generic equivalent available at this time. There's also another type of insurance that kind of splits the difference between those, and that has no coverage for non-formulary brand name drugs. And these are the drugs you see on television. They're the latest things, and in many instances those are not covered, or they're covered at a much higher copay or percentage that you have. The lifetime benefits, which will be going away shortly, they are another issue that you would have relative to the costs that you might suffer.
Okay. Now, how are the health savings accounts different? Now, they've been around for a couple of years. We talked a little bit about the experience, but maybe you can go into it a little bit more related to how they're different from the other plans.
Sure. The HSA plan, and really what the HSA idea is a high deductible health plan with the combination of the opportunity to set up a health savings account, which is an HSA. This is a separate account. They're both methods of paying for care. The high deductible health plan is the insurance plan that you pay your monthly premium for. And so, for example, that might be $2,000 in a year for an individual and $4,000 for a family. So it's a very high-end piece. And think about what we just talked about relative to the cost of the insurance. If you're going to be responsible for the first $2,000 or $3,000 of expenses, then your premium that you're going to pay to the insurance company is going to be lower, because they're not going to get involved early on. They're going to wait till you've already had some number of expenses that have been paid.
Right.
So that's the first method, or the first reason that they are different. Secondly is, usually with the deductibles on these plans, they're all inclusive. In other words, all medical expenses must flow through that policy deductible. That would mean doctor's visits, lab and x-ray, prescription drugs, anything of that type. Whereas when you have an HMO plan or a PPO plan that has a lower copay and a lower deductible, generally those benefits are broken out separately. So the HSA, it's pretty much all encompassed under the one deductible, and then you go into your co-insurance benefit.
So before we go on, so there is, of course, a tax deduction that may be associated with this, but we also have to mention that California doesn't recognize the HSA right now. So it's a federal deduction. It's not a California. And if you have earnings on your account, it's taxable in California. So the tax accounting for it gets to be a little bit of a headache and confusing. And I'm sure there's all kinds of errors on tax returns because of that. All right. I think we better move on because we just have a few more minutes left. So what are some personal considerations when choosing medical insurance?
Well, I think the personal considerations are a little bit about what we already talked about, is how much insurance do I need to have, and I guess in combination with that is how much am I willing or can I afford to pay for that insurance, and I think that's certainly a personal decision with every individual, and that decision may change from year to year. And I'll give you an example in my own particular situation. I had an HSA plan when they first came out. It was appropriate for me at the time. And now our family situation has changed subsequent to that. And now that's not the best opportunity for me. So I've made a conscious decision to move back to a PPO type of a plan that has a copay up front. Mm-hmm. So again, it's every year you're going to make those decisions based on what you see into the future. And unfortunately, many times you can't see that far.
Right.
You can only see what happened behind.
Right.
Yeah, you could also, certainly with an employer, you're going to take into consideration, again, the same types of things. What are my costs for this? If you have dual employee coverage, you have coverage, your spouse has coverage, you certainly want to look at that and make sure that you're not overpaying for two coverages, because that doesn't make any sense at all financially. And then also, there's kind of a new idea taking hold here in voluntary benefits, where many employers unable to continue on with providing employer-provided benefits are now going to the specific needs type of coverage that may be available to you through them, and that would be something like a cancer insurance, a specific illness or hospitalization insurance, something like that, which is an indemnity type of a policy that pays you a stipend if you have experienced those kind of things.
Right, and there's also cafeteria plan type of this called Section 125 plan sometimes or whatever. So that's like where you're able to put some money aside on a pre-tax basis, but it's sort of, for the most part, it's sort of a use it or lose it proposition, although they've got a little more flexibility than they once did.
Well, that's absolutely right, Mike. And the flexible spending accounts, those are available for people that have a regular configuration plan, a PPO or an HMO that has a low copay and that kind of thing. The HSA option then addresses that use it or lose it provision, which is the FSA's Achilles heel, if you will, by allowing a rollover of any additional monies that are left over in the plan. And certainly, as you recall from our former conversations on the healthcare reform, there's changes to those flexible plans that are coming up, which are not going to be make them as favorable as they once were. Specifically on the FSA and the HSAs, as at the end of this year, you're no longer going to be able to pre-tax over-the-counter medicines that you don't have a prescription for. So that's going to hurt our people that take supplements and those kinds of things.
Okay, Don, I think we're pretty well out of time. So I want to thank you again for being with me, especially for 3 interviews.
Yeah, there you go.
But we got, I think, some important information out to people. And so folks, pay attention to your medical coverage. Look at what your choices are. And we'll see you next time on Financial Insider Weekly.